we do have those Apple results, Romaine, coming in through right now. It looks like first quarter revenue is going to be beating estimates. First quarter revenue coming in at $143.76 billion. That is ahead of the estimate there for $138.4 billion. Also looking like a beat when it comes to EPS as well.
Yeah, I'm going to go through some of the percentages here because this is kind of the similar story that we've seen in past quarters. Top line revenue up 16% in the quarter. iPhone revenue up 23%. Mac revenue, that's down 7% year over year. Of course, we all have heard from Mark Gurman and some other people at Bloomberg saying that there will be a refresh of that. iPad revenue up about 6.3%. Wearables revenue is down. I don't know if you had actually gone through the Greater China revenue or not, Katie, but we look at that. That's up 38% to $25.53 billion. Margin expansion as well, looking at roughly about 19% growth on gross margin.
Yeah, really interesting to see these numbers come through. And, at a broad category level, it looks like a bunch of beats across the board. You can see that reflected in the share price now higher by about 2.5% here. A lot of questions, though, about what is going on when it comes to the strategy, product versus software, and, of course, what the AI outlook is. So let's ask some of them now to Walter Piecyk. He is TMT analyst and co-founder of Lightshed Partners. I'm pleased to say that he joins us now. And Walter, you've had a couple minutes, a second or two, to take a look at these results. As I said, when it comes to revenue, when it comes to EPS, when it comes to iPhone revenue specifically, beats across the board. What do you make of it?
I mean, I haven't had a chance to really delve into where the numbers are, but obviously in 2025, you've had this situation where the replacement cycle has stopped lengthening. It was a 10-year lengthening of the replacement cycle. So now we're going into 2026 and what the next product is and where the company is really going to be positioned in terms of AI. AI has been this kind of overhang on the stock that even, as you can see, that even though they've done well in recent quarters in terms of revenue growth on these lines that you were just identifying, even for this quarter, you've seen a contraction in the multiple and underperformance in the market, and the stock obviously starting off the year down because of the continued concern. I actually would have thought that the deal that they did with Google in order to develop an AI strategy, which is now multiple years in delay, would have helped to buoy the stock more. That was the big overhang on them.
Well, can I just stop you there, Walter, on that point, though? I mean, I know we have to wait for the conference call to get a little bit more details, and I assume they'll be asked a lot about that. But do you see that being a potential boon to them, assuming they actually execute on it? I know there's a lot we don't know in the details.
I mean, if they execute well and you turn Siri, which is could be a very personalized assistant for the consumer, that can certainly help them. If they don't have an AI strategy and we move towards agentic, and I think you just saw this week where the Chrome browser and the Gemini assistant is now going to do more things than it did just a week or two ago, and even what was added to Chrome was not that long ago, where you could have some Gemini integrated. If Apple doesn't come up with an AI strategy and there's better agentic features in Android, that is a long-term existential risk to the market share. Not only to go to Android, but obviously you've heard a lot of dialogue about additional ways that we're going to communicate with our data. Even, I think Mark Gurman had a story about how Apple's coming out with their own PIN, or maybe it was someone else at Bloomberg, very responsive to the rumors in the market about what OpenAI and others are developing. Why? Because we're in this, this technological change where how we're going to interact with our data is going to be very different, I think, 5 years from now than what it is today.